What's up, guys? It's Brendan, Market Makers Pro Trades. I have a special treat for you today. Instead of you watching me go over patterns and market sentiment and my monologues, I'm going to share with you a live stream we recorded today with my professional admin team. I want you to see what we have to offer in the Pro Trades room. Remember, this is a capped room. It is a small room. Our crypto room has 6,000 people. It's a fantastic community, but we trade so many markets in this room. We're trading stocks, commodities, and Forex. Therefore, it's going to be a waiting list only room. We're running a Christmas special from now to Christmas. If you're looking at the stock market action and you see that the SPX could be making near all-time highs or possibly blowing out the all-time highs on the back of 39-year inflation. If you want to see how the currency pairs react in times of high inflation, guys, commodities tend to do very well. We're trading all of these assets in this room. Now is the time to get involved in a trading room. This is where you want to profit in these uncertain times when the market could be doing a 180 at any given time, my friends. So guys, check out our link and I will leave you with this live stream. We do these live streams every single week in both rooms. Our market intelligence live streams are daily in these rooms. Guys, you will really like the content. No risk, no obligation. And yes, we do offer discounted memberships for access to both rooms, okay? So Lee will talk to you about that. You can message him. He will message you when you join, and you will never see a rate hike once you join. You are locked in. So guys, check out the room. I think you'll enjoy it. Watch our live stream. I'll try to reply to your comments. And this is the type of content we offer for you in our room. Talk soon, guys. See you at Market Open. Have a fantastic rest of the weekend. Take care. Everything's closed right now, but we want to go over some patterns and things that we have. And I'll show you what I have, and then Ricardo will get into his market metrics, and then we'll take questions and all that fun stuff during the stream. And this video will be posted in our room. Lee's going to post it after it's done recording, so you guys won't miss anything. And we'll try to keep it concise and pertinent to what you guys want to know. So everything good, Ricardo? You can see my screen and everything?
Yeah, seeing your screen, we see you, we hear you. We're all good and set. What's up, everybody?
All right. What's going on, guys? So I hope you guys are having a good weekend. Let's start off with the DXY real quick because it's been behaving very bearishly. So to tie into this, people are probably wondering, why did the markets pump? The inflation data came out for the US. It's the worst inflation in 39 years, 0.8% month over month. So if you annualize that for the year, it's actually 10% inflation for the year, even though the cumulative percentage is under 7% still. But it's actually 10% annualized. So it's the worst inflation in 39 years, but the markets rallied. Why did the markets rally? That's why the dollar dumped. Why did the markets rally? Well, because they actually thought it would be worse. That's honestly why it rallied, because the hedge fund managers, the big buyers, the big financial people thought it would be worse. So even though it's the worst in 39 years, it's like counterintuitive. The markets rallied. I think that's going to come back. I think you're going to see some big moves next week, this week coming up with the Fed meeting. Now, nobody knows what the Fed's going to say, right, Ricardo? Nobody knows what they're going to say. Everybody's guessing they're going to say they're going to increase the taper to battle inflation. However, Joe Biden, the president of the United States, just said he thinks inflation will start dropping off, and this is the peak. And then right after he said that sentence, he said, "But I don't do predictions about inflation." So nobody really knows what the Fed's going to do. But if the Fed does come out and taper stronger, this surge that you're seeing in the market, the dollar dumping, the SPX pumping, it's going to reverse. Okay. And we'll find out on the 14th and 15th. But let's just go through some charts real quick. Enough of my banter. We can, Ricardo and I will talk about this stuff after. Yeah. But so the DXY dumped, guys. We caught a bearish white swan. You can see right here. And it dumped us actually for the first time out of the pitchfork. This pitchfork's been tracking beautifully, as you guys know, for weeks and weeks and weeks. And it's dumped us out, but it looks like we're trying to pull back in. So we'll see what happens with the DXY. All the charts, this is closed, okay? So you're not going to see any action on this today. Let me go ahead and go into the Dow on the 4 hour. Now the Dow just formed on the 4 hour. This is kind of a classic cup and saucer pattern. O'Neill made this famous cup and handle, he called it. It's actually called a saucer and plate from Eilers when he invented it in the 1960s. So the bullish part of this is if price, this is a Dow, if price can keep coming up, you're you're bolting out of your handle essentially. Now I'm using a Darvis box here for resistance, but this is where you're going to start finding resistance, and you could see the Dow bounce off 36,150, which is definitely a possibility because again, that meeting is coming up. The euphoria in the markets may die down. You can see the Temas cross over here, and as you can see, very accurate. These are great trend indicators. We all use them, and you can see the nice trend that you got up from those Temas. Now that's the Dow, guys, but the action, the action look at the SPX. This is the all-time high right here. This candle is the all-time high, and look where it is. I can't believe it's that high up off of really bad inflation news, the worst inflation in almost 4 decades. And guys, this is too early to tell, but this could be the top of a distribution box for Wyckoff. Okay, it's too early to tell. We don't have enough waves in here. We don't have enough price volatility. I'll show you that on the Russell 2K, because the Russell 2K, in my opinion, is definitely in a distribution box. But this is too early to tell, but it is possible based on what's going to happen next week. Now, if the Fed doesn't do anything, by the way, the markets are going to make new all-time highs. That's just my opinion. But if the Fed just says, we're just going to monitor it, keep the program that we have in place, you're going to see the markets take off because they have the extra money in the market that's not getting pulled at the rate that it should get pulled. So let's look at the daily SPX. Even though we had this pump, we haven't defeated the all-time high. So this is a bullish cipher pattern that's still valid until this all-time high gets blown out, which is possible. I honestly think the SPX is going to bounce and get rejected at 47.40. I think it's going to hit 47.40, make a new all-time high by, I think, $3, and it's going to get rejected, okay? So I don't want to spend too much time on that pattern because I think it will end up being rejected and no good. But this pattern is valid. This is what we based the short off of in the room. This is a white swan. As you can see, we hit the PRZ. We got price descension. I had an active short here. And now when the inflation news came out, which is just really hilarious when you think about it, worst inflation in 4 decades, and price surges up. But again, look where this is, okay? 47.34. Your all-time high, I think, is 47.37. And let me show you where GAN is on this, because GAN is right there, I believe, at 47.40, okay? This is where I think price is going to, if I had to make an educated guess, assuming the Fed, especially, I mean, this all is the presumption the Fed is going to increase the taper. I think you're going to see price come up here, maybe even get up, but I think it's going to get rejected and come back down. So I'm watching this. This is a very bullish candle right here. You can see that price, the buyers were able to maintain control, even though this candle was vacillating back and forth. This is an 8-hour candle, and it is a type of doji, but it is a bullish doji, okay? So you could see price start to reverse here, but I think it's going to test up a little bit higher until we get closer to that Fed meeting, but we shall see. That is something to watch. Let me see what else we have here on the indicators really quickly. Let me look at my DMA cloud. Yeah, so we're still bullish here on the DMA cloud. So blue candles are bullish, red candles are bearish. As you can see, if we do come up and get rejected here, we could print some type of head and shoulders pattern, with this being your left shoulder, this being your head as it forms, and then turn my magnet off, and then this would be your right shoulder over here. So it's just something to watch out for as well. So this is the Russell 2K. So this is why I said this is a distribution box. If you guys are familiar with the Wyckoff, I'm going to try to put this in a Wyckoff. These markets are so, Bitcoin's easy to put into a Wyckoff because of the price movements. But let me show you this. Let me show you guys this, because this is why I say it's a distribution box. So if you look all the way back down to here, this is your COVID crash, okay? So your COVID crash would literally be accumulation. This is your accumulation. Clearly you have markup. Clearly you have reaccumulation here on this box, and then you have markup. That's clearly markup, okay? And then from there, you're in this distribution box up here for the Russell. And what characterizes a distribution box in Wyckoff? Well, if you read his books, which is where I get my source material from, Wyckoff says sideways price action with wide-ranging volatility. And if you can see these compression rates for price, 11% range, 8% range, 10.5%, 4.5%, 13%, all in the same sideways movement. You're in a distribution box. Not only that, you have the 200 moving average here cutting through the price. And as you can see, Russell is currently below the 200. Now, these are the small caps. Small caps lead the big caps oftentimes. You can see the small caps, even though the market rallied, the SPX rallied, the small caps are still bearish. Okay, you have these wide-ranging price fluctuations here in the distribution box. So we really need to see what happens with that Fed meeting. But it's a really good example of potentially this being a distribution box, which to me it definitely looks like it. Guys, I like EV technology. Ricardo may or may not like EV technology. I think the batteries are really bad for the planet. But having said that, but one thing we both agree on is that the stocks are hyper overvalued. There was a short we had in our group on Lucid. Guys, look at this short. I mean, this has been a fantastic short for Lucid. Now, it did help. We got down to the 382, and then news came out, Ricardo, that the SEC had sent in a subpoena to Lucid, and then it dropped even more, obviously. So even though the market rallied, you didn't see much recovery here in Lucid. That wasn't a very good recovery at all. And if you come down here, this is a 37% drop. 37% drop. Now, I got out of this at my take profit target somewhere down here. Unfortunately for me, I was too greedy. I should have let it run. My biggest weakness as a trader. Now, let me cover the Forex real quick, and I'll kick it to Ricardo. But, guys, we are tracking this. We've been talking about this in the community chat section. We had our bullish pattern. We had that nice kick up to the 618. That's when the dollar pumped, right? And a lot of us took profits that were in this trade. And then it came back down. And then look at this. You have a cup and handle pattern that formed. And look what's happening. So you're starting to form compression waves. Now, usually you get 2 to 4 compression waves before you get a breakout. And these are reducing, but they're not reducing a lot. You want to see this get cut in half, okay? So I want to see it go from 0.86, 0.71 to maybe like 0.50, 0.250, and then you can see an explosion in price. And again, that can go either direction. So you have to check your momentum, check your volume, everything, and see what's going on with it. But you can see here, if the ATR, you can see your waves forming. You can see it in the ATR right here. So it's just something else we're watching, tracking for the room, because other volatility indicators like the Caterpillar, RSVBB, you guys should all download that. I did a volatility indicator video. Check that out. I go over this stuff. This shows it contracting too. You see this? When it's opened up like this, it means wide price range. You can see the top and the bottom here. When it starts contracting, just like the compression waves, at some point it's going to come to a bottleneck and it's going to explode up or down. We got to see where we are in the trend and what's going on with the dollar. Last one I want to show you. This is USD MXN. So we've been talking about this a lot. Ricardo's very familiar with the Mexican peso. He lives in Mexico. Obviously, this is my favorite Forex pair to trade. It's highly volatile, but it's been lagging behind the dollar. But even when the dollar dumped, it didn't really move that much. So it's just kind of baselining. So we're just watching this. We want to see it break above our DMA trend cloud, which is based on 5 and 8. So we want to see it break above this, get a bullish trend. And if it gets a bullish trend, even though this is a bearish pattern, it could track the C to D pattern. Look at these price moves. A 4% move in Forex, and this is from the bottom of the Darvas box. I'm not even talking about from down here, because you got to capture the trend, right? You don't want to trade it too early. You want to get a breakout. A 4% move or a 5% move in Forex is absolutely huge. As you guys know, that Aussie dollar that everybody cashed in on that traded, that was a 1.5% move, and you can make a ton of money. I mean, this from the base of where it is right now is over. This would be, if it comes up to this D point, it's a 6.5% move, Ricardo. That's crazy. But, we're tracking this closely. Again, nothing's happening yet. It could break down further, but these trades and these TA is posted for you guys to monitor and watch and ask questions about. So with that, Ricardo, I will kick it to you, my friend.
Hey guys, what's up? You guys know me. My name is Ricardo. I'm the market analyst over here at Market Makers. And just to let you guys know, Marbob is also on the call. He just joined as Brendan was doing his presentation, so we can all talk. And there's a couple of things I want to show you guys. And so I'm going to start off with the general market update. I think I'm going to start off talking a little bit about what Brendan is looking with the Mexican peso pair with the dollar. So what I'm expecting for the Mexican peso and dollar pair, it's for us to start moving maybe by the 15th. Because on the 15th, we have the Fed meeting, and on the 16th, we have Mexico announce its monetary policy for the next year. So usually what happens, Mexico usually tries to follow suit behind the dollar. So whatever the U.S. does, Mexico does a little bit harder and soon after. So if we're not seeing a lot of volatility right now, it's because we're waiting for news in the next 5 days. And I'm actually expecting like a really big move because both countries, both Mexico and the United States, are having an extreme amount of inflation. I'm going to be waiting for at least that day to have a really big move when it comes to the dollar Mexican peso pair, because The U.S. dollar currently it's having the worst inflation it had in the last 40 years, and the Mexican peso is having the worst inflation it had in the last 24 years. So both coins, both currencies, they're pretty much having a lot of problems with inflation, and they're going to be adjusting their monetary policy. They're going to be tapering off. Mexico is going to be hiking. Actually, Mexico has been hiking its interest rates. Actually, Mexican interest rates are really high right now. We're at 5%, and it's still going to look like it's going to go even higher still. And because we're really high with our interest rates and the inflation is still going out of control, so we need to hike it up. We may end up next year seeing an 8% inflation, maybe. But so what's going to happen is it's looking like that everything is just being like a pressure cooker. We're going to have a really big move, maybe by Wednesday, Thursday next week, and that's what I'm expecting with the Mexican peso and dollar pair. I'm actually reading out the Mexican financial report, the yearly financial report that they're throwing out. It's a long read. It's really complicated. It's really technical because on different. That's the thing that when it comes to Mexico and the United States uses really simple, easy to understand terminology. Mexico uses really highly technical terminology, so it's really hard to read these things because it's just how Mexico works. They're really proper and technical, and it's really really tough to read these things because they're just so complex sometimes. So I'm reading this out. I'm going to be giving you guys the report on this. And now what I'm also looking into deeply right now is S&P 500 and what the Fed is doing. So you guys know about the inflation. You guys know what's going on with the Fed. If this is going to be something that's going to take down the market, like properly and fully take down the market, I'm not expecting us to take down the market, not just yet. If anything, we would be waiting for maybe 3 or 4 months until we start seeing these things come into effect. When we start actually seeing not only the quantitative easing taking down the market valuations on the stock market, but I'm actually waiting until we start having the interest rates hike up the price. Sorry, start driving everything down because you guys have been wondering, okay, so why is it that we have the Fed print out their bad news, give out bad reports, and give bad things in the markets? And we're seeing the price action on the stock markets just trend higher. The main reason because of that, why that is happening, it's mostly because what happens with the markets, I'm just, give me 1 second to find your reports. So whenever you see bearish news, when you start seeing things like, oh yeah, inflation is out of control, we have more job openings right now than in any point in history, or when you see that consumer credits are extremely high, people owe a lot of money in the highest rate where you have ever seen in your life, and it isn't going down, or when you're seeing family incomes go down also, you see the stock market just rally and keep up pumping and going higher and higher and higher. And the reason why that is happening is because the economy and the stock markets, they have almost an inverse relationship. So, and it's because of the United States government that's giving all this stimulus into the stock markets. So whenever the economy is bad, whenever the things are looking really bearish, whenever things are looking really bad, you see you see the Fed say, okay, you know something, things aren't looking really good. We still need to stimulate the economy. The stock markets get excited about that and just continue rallying. So whenever you start seeing things that are good for people, that's when you're going to start seeing, or whenever you start seeing signs of a strong economy, that's when you're going to start seeing things go bearish with the stock markets. So, for example, things that may be bearish for the stock markets, it would be wages being raised next year. There's a lot of talks about wages going up next year. Give me 1 second to show you guys job wages.
No, you're right about.
Yeah.
I watched a lot of economists this past week too talk about that. People don't realize when you increase wages, you actually end up cutting jobs, and cost of goods also goes up as well, which doesn't help with inflation.
So yeah, and actually, when you raise wages, you have these companies have to dish out more money. So they're starting to be bearish because they have more expenses. So whatever, pretty much anything that builds up expenses for companies, that's going to be things that's going to be taking down stock markets. So whenever you have like really bad news when it comes to the economy, that's why you have a bad Fed report, a bad CPI report, a bad inflation report. Whenever you have all these bad reports, you almost always see at the very least on that day the prices pump and rally. And that's because the stock markets get excited because they know that more stimulus money is going to come in, knows that there's going to be high chances that the Fed is not going to go through with the tapering or with the quantitative easing. So right now, everything has eyes on the next meeting Wednesday with the quantitative easing. actually, I'm starting, because now that I'm seeing everybody talk about that, I'm actually starting to think that the Fed is going to reverse, and they're going to say, you know something, maybe we're going to keep the party going for a little while, and we're not going to be accelerating the tapering because the economy is not looking that good. We need to stimulate stock markets, and that's going to be pumping things even further. So until we start seeing the Fed actually reverse on their, or when we start seeing the Fed actually start accelerating the tapering, or when they start actually raising interest rates, that's when you're going to start seeing the markets tank. So it may take a
So
while start.
it's interesting you said that because a lot of people think that's why Joe Biden, the president of the United States, for our international members, that's why people think he said what he said about inflation, that he thinks it's at its peak and it's going to come off, drop substantially. He's saying that a few days before the meeting because the Fed in our country is supposed to be independent, but the Fed chairman's appointed by the president. So it's really not that independent. So so there's a relationship there. So that's why really when people tell you what the Fed's going to do, they're just guessing because nobody knows, just like Ricardo was saying, what they're going to do.
So the thing you have to look into, because there's a few ways you can see on what the market is doing, and this is going to be like our general indicator barometer what the markets are doing. We have to see the Fed funding rate, how much money they're injecting into the markets, and when you start seeing that slow down, that means that we're going to see our crash. One thing I have to tell you guys also is that the longer we stay doing this, the longer we keep on pumping the prices, it's going to give a harder crash in the end. So maybe we're not going to crash this month. Maybe we're not, because also December is a really bullish month. We have a lot of execs. We have a lot of people that want their bonuses. I mean, greed in the end. So they may hold this price. They may hold the price and have it go sideways for this year. We may be seeing a crash up all the way up until March of next year when we start having the quantitative easing. But the longer this stays overheated, the harder correction or harder crash we're going to be having in the long term. So what we're expecting right now is just to see what the Fed is going to be doing, because the Fed says they're going to be tapering off. They're going to saying that they're going to be raising their quantitative easing, but when you see the funding rate is not going down. So if they're saying one thing, they're doing the other opposite thing. And as Brendan said, I mean, in the end, it is controlled by the president. And actually, Jerome Powell, he is appointed by the president, and he has to take care of his job. He's put there for a reason. So he has to comply, and he has to work with whatever desire the government has. And in the end, the intention of the government is to have the dollar reign supreme and have the economy reign supreme also. So, I mean, a weak economy is not a good thing. Weak stock markets and weak economy would be even worse. So they have to keep this party going still, just the way I'm seeing it.
Yeah, it makes sense. Did you have more you want to share, or do you want to let Marbob show a couple of his charts that he has on the indexes?
Yeah, no, I think we can have Marbub show his things while I prepare my own showing and conversation in the end.
Sure. Mark, if you're ready, let us know.
Hey everyone, this is Marble 6. I hope my microphone doesn't cut off this time.
No, it's working good.
Awesome. So I just want to go over the three major indices. You guys know I am pure technical person. The fundamentals I leave in my bag. So I focus on the chart, and I'm going to share what I see here. This is the S&P 500. We talk about the bullish 50 in the room. We notice that we found support at the 50 retracement level and bounce off those levels. We are now nearing the previous high of November 8th, the first week of November. And this is actually a tricky level, to be honest, because we can have an up thrust, another failed attempt to break the previous high, and then roll back down. Or if I look at the technicals, once again, we can see hidden bullish divergence on the S&P 500. We can see higher levels in price and lower levels of negative momentum, with the first positive momentum on the histogram island, meaning price action or impending price action continuation to the upside. We clearly have a nice bounce, and if prices do not get too bullish here, I'm just showing the technicals. If we bounce off these levels, the 50, which we have for now, if we break above the previous high, we then can estimate the swing high to swing low, the Fibonacci levels, and estimate the target at the golden ratio, which is usually the one of the main targets once you break above the deepest levels of retracement, the 0.786 and the 0.886. So we are currently near the 88.6, which is the deepest levels of retracement. Another thing, I'm gonna have to clear the chart here.
Hey, Mark, what was the price target for the golden ratio? Was that 4,900? Couldn't see it.
Yeah, it's near. It's 48.91, 4,900 basically, with maybe the scam or the wick above. But yeah, basically 48.90, 4,900.
Okay.
But this is based on the fib level. So if you
right,
I'm gonna clear the chart here. If you guys see, we plot the swing or the peak of the high level, the November 22nd, to the recent low, and we have the golden ratio at 48.99. Another pattern that seems to be in development is this right angle broadening wedge, which we can see several touch points here at the upper trend line, as well as lower trend line. That, to me, this is it looks like a right angle pattern from Bukowski. Plus, again, with the hidden bullish divergence, the odd, to me, as a technical trader, this may imply higher targets. So we have the measure move of the upper trend line to the lower. We move the price above, and again, we have confluence pretty much with the 0.618, the 1.618. And with a wick, I think that's the one that take us to 49.31. That'll be the price. So if we break above, we have an increase in price around 40% move, 40.59 to be precise. So this is what I have for the S&P 500. Now if we move to the Nasdaq, we can see a clear primary trend still in a bullish trend. We have a series of higher lows and higher highs. With the recent low that we attempted to break below the hard line of the parallel channel, we managed to break above, or to jump back above, with a bullish cipher. I believe we had that in the room as well. Yes, this is a bullish cipher, and we're again nearing the top of the upper trend line of the channel. So we either find resistance and we roll down, but this asset is also on the daily, is also printing hidden bullish divergence that already played out, I believe. No, not yet. I believe the Dow Jones had already managed to have some positive momentum on the histogram island. So these can we can wait for the bullish crossover and start rolling higher, so price can keep climbing, or it can be another attempted rally or a fake out rally. So we are monitoring this chart on the Nasdaq, and the last one for the Dow, we have the amazing bearish butterfly that play out pretty much with a downward move of almost 7%, 6.94%, and managing to bouncing off these levels. I'm not sure if this is going to be the known or the well-known B-shaped recovery type, or the prices will again just near the previous high, make a double top, and then start reversing from there. If that's the case, we can probably have some type of harmonics in there. If this is a too deep, maybe 80.886. Correct. Yes. So this is a very dangerous part, because we can have a bullish deep crap. We have the B point, which is the deepest or the shallow level of retracement, and we're managing on the C point, or working on the C point. We either find resistance at 7.886 or the 0.886, and then reversing to the 1.618, which is what a crash may look like if that's the case. Jesus. It has to be on the 1.618. I'm just doing this by eye.
Yeah.
I noticed the B point of the bullish graph.
It's never a good thing when you have to shrink your chart down to fit the PRZ
right
in there.
Yeah, so these are basically just the data points based on the B point from where we bounce.
Mark, what is that PRZ in case people can't see the number that you highlighted? 32028. That's the number.
So that would be a 20% correction, right?
That would be if we start reversing from current levels. I doubt we're going to start rolling over or rolling down from here. We can probably go a bit higher, depending on the dates coming for all the meetings for next week. But an average will be around 10%, 12% from the 7.86.
Which is a correction. Anything over 10% is a correction. So it's definitely viable. And one thing for everybody to know in the room, guys, we're going to trade these. We're going to put these trades out there either way. If we go bullish or bearish, we don't have a preference.
Yeah, this just come out of my eyes now that I was trading. I was charting this right now. I didn't even notice this before. So we have a shallow retrace, which is the 0.886. So these are the charts what I have. And I also want to share maybe a quote based on Charles Dow, since he was the guy invented or creating the Dow Jones, correct? And he suggests that in most bull runs or most bull markets, there comes a time when the public controls the fluctuations. And we're seeing that retails are actually buying the stocks. So I just want to share these as a thought.
No, that's very true. I mean, we all of us have talked about that. I've said that in my Pro Trades video. This is the most retail money that has ever entered the market at one time for this Omicron dip they're calling it, even though you see CEOs exiting the market, in some cases 100% of their portfolio, retail's buying it up. So it's really like, it's kind of like a battle. You got to kind of see who wins this. And like I said, I think the referee is going to be the Fed when they ring that bell. They can let this thing fly up more, or they can, try to slow it down. So we'll have to see what happens.
Yeah, actually I have some charts about that also, where I can show you that retail is the retail is who's buying the dip. There's just a lot of data when it comes to everything you're saying. And that's a really cool thing, because all three of us, we do our TA separately. We all see things with our own accord, and we just pretty much do confluence when we do these live streams. So it's really impressive to see how all three of us find consensus with different methods on what's happening on the markets.
Yeah, no, it's great. I love doing this with you guys for sure. And guys, be aware too, if you have any questions, if you watch this, we know everybody's busy. It's the weekend, the markets are closed. Feel free to ask them in the community chat as well, and tag us. You can tag all three of us, tag one of us. You have any questions about the room, you can message Lee in the Discord as well, how to use it, navigate it, things like that. Did you have anything else you wanted to add, Ricardo?
Yeah, sure. For example, the thing you were mentioning, let me share my screen. I'm going to cut you off, Marva. If you want me to share the screen, just let me know.
All right.
Okay. So over here, this chart is showing how retail is rushing to buy the Omicron dip. Well, they're calling this the Omicron dip. Actually, it's been correlated more with the Fed tapering. But retail is who's buying the dip right now. So it's right here. Here's the chart. If you guys want me to share it, I can just send it over. If you guys want to see it closely. And something I have over here is something I was mentioning with Brendan. That is, this is your Fed, what's it called? Your Fed balance sheet. You can see that the Fed has been injecting money into the markets, and it pretty much corresponds with your big market moves. So, for example, in 2018, when we started going back down around October, December, it was because the Fed started lowering the amount of money that we're putting into markets. And you can see that pretty much our rally and everything has been driven through what the Fed is doing. So the Fed is just pumping up the market. The moment the Fed decides to stop injecting money into the markets is when you're going to start seeing this crash. And it's injecting a lot of money right now. You can see that we've been also going pretty much parabolic with the funding, with the amount of assets that the Fed is putting in. It's absolutely insane. It's crazy. You don't see this amount of money. This is direct government tampering into the stock markets. Actually, a piece of news I just heard today or yesterday was that the Department of Justice is going to start doing an investigation of stock market manipulation with the Fed directly. So, I mean, I don't know if it's going to prosper. It's going to take months because these things take months.
They're looking at hedge funds, how they manipulate stocks with their trend reports, analyst data. Then they make it public after they expose positions like short positions. So that's what they're. Yeah, I mean, just so I know you guys know this, but typically these investigations take months or years. Look at the Ripple thing. They take a very long time, and nothing may ever change. There may be a new administration. They get rid of stuff. So we'll just have to see how that plays out.
Yeah, and actually, that's the thing with these kind of sort of things. They don't play out immediately. Actually, with the price action, one thing that is really constant is that when you start seeing things go sideways for a prolonged time, it just increases the chance of a rollover. But we can have a long rollover. We can go sideways for months. We can pump up right now and just dump, or we can just dump at any point. I mean, that's the thing with the markets. What's happening this week is it looks like that everything's just sitting down and waiting to see what the Fed is going to be saying, and pretty much everything is just tied to that. Oh, one small thing also when it comes to your maps. This is your S&P 500 map. Usually, this is one thing I usually say with my reports and my live streams. Your small caps lead the big caps. So when you start seeing this turn green, your next day it's likely to be green also with your big caps. And so I'm expecting, just because of the amount of green I'm seeing in the chart, that we're going to have a green Monday and the market's going to rally. This is something, a little trick that somebody taught me a long time ago with the stock markets.
Yeah, I mean, we got the momentum for it. I showed that. Marbob showed that. You see it in the data. Yep. So, guys, really appreciate it. This was a great stream. And Ricardo, thanks for being here. Marbob, thanks for coming on. And Lee, thanks for being here as well. And guys, this will be posted in the room for you guys. And let us know if you have questions. And thanks again.
Yeah, thank you, Siga. Thank you, everybody, for joining us. We appreciate you guys coming here and listening to us. If you have any doubts, just send us a message, and we're here for you guys. And Brendan and Marbo, of course, will be posting their excellent trades. They have a really good track record right now. So thank you for your preference.
Appreciate that.
Right. Thank you,
thanks, guys. Have a good weekend.
Later.
Bye-bye.
Bye-bye.